We're seeing support above the $5 mark, record exports last week. What do you make of the corn market right now? Is this rally here to stay?
Well, it's been a nice rally. Back in August, September, we put a low in on the March board at 404. So we finished at 504 on Monday, which has been a dollar rally, which is great. So that's what, a 25% rally in corn, which is, for commodities, that's a big rally. So exports, like you said, have been really good on corn and the beans, so that's been positive. But with the rally we've had here, you really have to look at, how much do I need to be selling here as a percentage of my old crop, and then start thinking about new crop here, because that is a significant rally from where we were, which is nice.
Let's talk about 2025 and intentions of what the farmer is going to do. Right now, there is the incentive. The market's telling us plant more corn acres. Are you hearing from producers that are planning to do just that?
Producers and seed salesmen and people are putting on anhydrous, and especially now with corn rallying $1 and beans have been, that corn bean ratio, is definitely favoring corn more. So it's probably down in the mid-south where you're going to see another million acres, just because last year they were planting a lot more cotton, because of where the prices were on that. And now this year, cotton and rice are both in the tank, and they'll be putting in more corn down there. And then you also see more probably corn in what I would consider to be marginal areas outside of the major corn belt up in the Dakotas, and that's where you're going to see, just looking at basis levels and looking at that opportunity. I think people are just been more happy with their corn production. Beans have had, struggled, with different disease issues, and moisture last year especially hurt us on bean yields. But yeah, they're feel better about their possibilities in corn.
What do you make of the soybean market? Why is it not kind of following the same trend as corn is right now?
Big carryovers in the U.S., big upcoming carryovers in Brazil. It's just keeping a cap on it. I mean, the reason beans are probably holding in here is we've had that dollar rally in corn. And we did have that nice rally in beans into January, which is kind of a seasonal strength period for the beans and the corn. The beans kind of slowed down a little bit here, in February, March. Corn stays seasonally strong into March as well, which has been good. But we also get into those seasonals kind of turn a little more choppy as we go forward. Deese corn seasonals are pretty positive here all the way into June, but that's a big reason. It's just there's a huge one of the largest carryovers in the world that we've seen on beans, and also a heavy abundance here. And then with that South American crop coming on, that's going to start keeping our basis under pressure here. And as they harvest that second crop of corn down there, that puts basis pressure down there, which makes them more attractive. Their corn's cheaper than ours. Their beans will be cheaper from a basis perspective, which will redirect exports. We've had tremendous exports, but unfortunately that window is going to close on us pretty quickly here.
That's what I wanted to ask you about, kind of that export window. Right now, we're seeing some of that here in the U.S. for both corn and soybeans, and at some point, that is going to shift more toward South America. What is the typical time frame?
Well, beans, that's the times now. Yep. Their harvest is they're doing well harvest-wise on both their first crop of corn, second crop of corn. They've caught up. They're planting that second crop of corn right now. They're right at their pace. There are no problems down there on that. But with that basis dropping off, there'll be a big push on. There's a big increase in Brazilian exports coming up here in the next 2 weeks.
All right, let's talk back 2025 growing season for U.S. producers. Coming up pretty quickly is the decision between ARC and PLC. We talked about that with Brad Lubin on the show last week, but what's your take from a grain marketing perspective, what producers need to be thinking about?
Right, you wonder how that's going to create a floor for you under your crop. And the PLC levels and the ARC levels they've changed this year, because the ARC is based on Olympic average of your prices and an Olympic average of yields. Actually, revenue you're seeing on that corn and beans both are more attractive than on the PLC side of it. The PLC side is just a price, but when you look at that price on the ARC and you take the price deduction on it, it's like around 436, and corn's 424, I think, on the PLC, if I remember those numbers correctly. But the bean side of it, that ARC number is quite a bit higher than the PLC. So I find it much more attractive too in areas where you're non-irrigated. You're going to have more yield volatility, and you really need those payments in years when you have lower production, and that ARC would probably come in and pay out. Now there's going to be a cap on the guaranteed revenue on corn, for example. It's about $1,000, so the payments would be capped out on the ARC there. The PLC is going to give you deeper coverage going all the way down to the loan rate. There's almost a $2 range in there that they would give you support. But if we go that low, that's going to be pretty ugly. But the other thing you have to remember is how does that compare to your base acres compared to what you produce? Oilseeds are only included in the farm program, I think, since 2002. So there's not a lot of soybean base. So it's probably more relevant on corn. But a lot of times people have maybe 50 to 75% of their base of corn relative to what they plant. So it doesn't really give you complete coverage, but there's definitely some coverage there. So to me, ARC seemed like, the ARC County seemed like to be way to go. But then some people are looking at SCO, ECO products right now, and that you've got to have, if you're going to do SCO, you've got to take the PLC on the farm program.